real estate market continues to cool down.
Rising interest rates are concerned about the economy.
We are all aware that the housing prices in Vancouver are notorious for being some of the most expensive in Canada, with one politician, Carol James, even going so far as to suggest it was due to criminals laundering their money through real estate. Now, in truth, it's far simpler and a lot less racist than some international crime syndicate. It's down to supply and demand. With the increase in population size and the decrease in housing being built, especially affordable housing, it really does seem like the dream of owning property may have to die. Or does it? In episode 1, we met one of the co-founders of Addy to talk us through this new app that aims to enable every human to own property. If you want to watch the full interview, I'll link to it below, as it certainly gave us some pretty unique insights into this company's goals and dreams. But also, from that sit-down talk, we managed to secure another interview with one of the people who picks the properties that the Addy community invests into. Here we are with Keith Roy, General Partner of 2930 Cambie Street, to tell us all about how Addy chooses the properties that they invest in. Thank you so much for having us in. So, first question I've been asking everyone who is on this journey with me: is Addy a scam?
So Addy is not what someone invests in. Addy is a technology platform that makes it possible for individual investors, smaller individual investors, to get access to high quality commercial investments like this. We're standing in a 19-unit residential building, 2 blocks from City Hall. We're in the middle of Vancouver. This is a high quality building that most people on an individual basis couldn't get access to. If you want to do a deal like this in the stock market, you pay a broker fee. If you want to buy and sell, you're paying fees. If you want to get access to stuff, like, you're always paying fees. Addy's not taking fees. They just have a membership. You can come and go as you please. You can invest once, pay your membership, and never sign up again. Addy's not taking people's money. It's not investing in people's money. Addy is acting as a conduit to get money into great investments.
So Keith, talk to me a little bit about how Addy chose this building and how they choose all the properties in general.
So my experience with Addy is on both sides. I'm a member. I've invested in over 15 other opportunities that have appeared over the years. And when I was buying this building and putting the deal together, I went to Addy and I said, look, I've got this building. We're looking to bring investors on. Is this something that would meet your criteria? And they took me through a really rigorous due diligence process. They vetted me as an individual. What's my credibility? What's my track record? They ranked me on their own ranking system to make sure that I was credible. Then they ranked the building. I ran my own analysis and spreadsheet. Like, I'm a guy who likes Excel. These are guys who live on Excel. And they sent me back some spreadsheets that I was like, whoa, it blew my mind. And in some cases, their spreadsheets reinforced my decisions, because it turns out I was doing the right thing and it was a good building. And then once they vetted the building, they actually came to the site. And this is pretty rare in a lot of investments. Met the inspector, looked at the property, learned what all the defects were at the time, included that in his report. So they do their due diligence, and then they bring that back, check it off. They're like, okay, Keith's a good general partner, we trust him. The building's good. Then they look at the wider market, what's going on in Vancouver. And then does Keith have a plan to exit the money at some point in the future? Can the investor get their money back?
So Addy is really making sure that they're not funneling money into someone that's going to take the money and run, or never give out the money ever. They don't want a 100 or 150-year lease that no one ever sees a return on.
Addy does a very rigorous due diligence process to make sure that your $1 or $1,500 is protected, because it's interesting. While they're not the owner, it's their reputation. So as a company, they need to make sure that they're bringing great properties to the platform that people can benefit from. And they've had exits already. They had a building that exited downtown, sold much quicker than anticipated. Owners made much more than anticipated in a short period of time.
It's always nice to be making a little bit more money.
Yeah.
So what is the criteria? How do you vet these places?
I wanted a building that was somewhere between 15 and 30 units. Small enough that I could self-manage for some efficiency, but large enough that I wasn't competing against individual investors to buy it. So 15 to 30 units in Vancouver tends to be in the $7 to $15 million range. And my last criteria, this one's actually really important. I wanted the building to be in a location that was highly probable for rezoning inside of a 10-year period, because I want multiple exits. So exit 1, I just sell the property as a high quality revenue producing multifamily asset. Exit 2, I amalgamate with a number of other buildings that I've accumulated over the years, none others yet, but I put them all together and I combine them and I sell them to a pension fund, which buys them as a collective. And I say, here's 80 units in one bundle you can buy with one contract. Option 3 is I exit as part of a rezoning with significant increased density and obviously increased money. So those were my criteria. This building comes on the market. It's 19 units, it's $9 million, it's fully renovated, incredibly attractive financing, Class A location, next to City Hall, close to the Canada line, which is already built, and the Broadway subway line, which is being built, part of the Broadway plan for rezoning. Check, 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 meets all my criteria.
What are the pros and cons to someone who's approaching an investment like Addy? What do you see as, say, a layperson like me coming into the scene? What can they expect and what should they be wary of?
So you're not investing in Addy. Addy has done a lot of the due diligence for you. Addy is providing you the conduit through which to make your investment, but you're investing in an individual property. So in my case, myself and 2 other partners are the general partner for this building on Cambie Street. You want to trust the building, you want to trust the location, and you want to trust me and my team. And you want to trust our plan that we can get your money out with a return in the time frame that we're suggesting we can do that for you. Now, Addy has found a bunch of different properties in a bunch of different locations that all offer different returns. There's a building in Kimberley. It has good cash flow. I'm unlikely to double my money in Kimberley by selling the building 10 years from now, but that's highly probable in a city like Vancouver. But along the way, I'm unlikely to get any cash. Whereas in Kimberley, I'll get cash every quarter. There'll be a distribution as a result of owning this building. So it's whatever you choose you want to be in for an investment. Addy's found a bunch of different ways to get that investment opportunity in front of you. I had some people who didn't want to invest here because the time frame was too long. My mother-in-law didn't want to invest because the timeline was too long. She's in her 60s. She's like, I don't want to put, a couple $1,000 and tie it up until my mid-70s. But all my friends, guys in their 30s, yeah, how quickly can I invest? I don't need that money for 20 years. You can have it for 10.
Is there any immediate cons that you would see using a platform like Addy to invest through to a property like this, be it the smaller price that you can invest in, or how the return works, or how it might work with collateral or equity or anything like that at all?
The biggest con to investing through a platform like Addy, as with any private investment, is that you can't get your money back until your money's back. You can never go to the general partner and say, I want my $1,200 back. It's not there. It's here. You're standing in it. I can't give you this tile. I can't rip a sink out for you. But that's where your money is.
That's my $1,500.
That's your $1,500, right? We put the countertop in and the cooktop. So if you're not prepared to leave your money in that investment for an extended period of time, you shouldn't be investing in something like this. The other con, which is in the same line as that, is you can't leverage that money. The bank is unlikely to look at that and say, oh, you've got $20,000 over 15 properties on this platform. We're going to use that as collateral to loan you $10,000. The bank's just not going to do that because the bank can't go get this. So it's an investment, but it's an investment that's under someone else's control and you're unlikely to get access to it again. But big private investments tend to be where the big returns happen, where you buy Tesla before it goes public.
And so obviously you managed to get a very big return on a relatively small investment that is quite safe.
Yeah, because real estate is a leveraged investment, different from the stock market. So if I invest $50,000 in the stock market, it goes up 10%, I get $55,000 back. Not a bad return. If I invest $50,000 in real estate, but the real estate is 2/3 leveraged, like this building, we have roughly $3 million in equity and $6 million in loan. So if the building goes up 10%, it's going up $900,000. And that $900,000 is a return on your $300,000 investment. All of a sudden, we're in the 30% return range because real estate's a leveraged investment, whereas you tend to not be able to leverage in the stock market.
How do you see the future for companies like Addy and that kind of investment structure in real estate?
It's very reasonable to assume that a company like Addy will continue to provide properties to the market, and there will continue to be a demand from potential investors for that access. Crowd sharing is the way of the future, and the internet has connected all that. Addy's just found a way to do it on a really niche part of the market.
If Addy, as a company, touch wood, goes bust, if it goes belly up and the company no longer functions or something happens, Are people's investments still safe?
Let's go through a worst case scenario. Addy goes belly up, and 5 years down there, 10 years down the road, we sell this building and we've made some money. And I need to get that money back to 1,100 people. With Addy, all I do is I say, here's your money, and it just goes, and it gives it out to the 1,100 people through the software. But it no longer exists in this scenario. Now there's this company that owns all these shares. I go back to that company and I just have to write 1,100 checks.
Okay.
It's more cumbersome and there's gonna be some accounting fees and stuff, but the investment is going into the general partner and the building. It's not tied up in the whole business that is Addy.
So my final question for you today is, if someone like myself is a little bit cautious about investing in Addy or through Addy, what would you tell them to give them a little bit of peace of mind?
Why are you so worried about investing $1 in something? You can give it a try. There's no risk in $5 or $10 or even $100.
And I think it's really reassuring to hear that you are actually in the app already yourself. That's very reassuring for someone like me who's like, what's going on here? And you're like, no, my money's there as well. Keith, thank you so much for taking the time to talk to us today. I feel like I know a little bit more about this crazy thing that I've stumbled across. So yeah, I really appreciate it.
Thanks for coming to 2930 Cambie.
Thank you so much. Well, I am pooped. Who knew 2 interviews in the blistering Vancouver summer would be this tiring? Now, hopefully we can all feel like it was worthwhile though, and we came away from today having learned a thing or two about this whole app. The thing that is niggling me though, like just eating at the back of my cranium, is that Addy to date have been very transparent. They were willing to talk with us, willing to put us in touch with other partners of theirs. It has been great, but these people are all in the Addy ecosystem. They all have some kind of vested interest in the product, and I kind of want to hear from someone who doesn't have anything to gain by speaking about their experience. Someone who ultimately won't hold back about how they really feel about using the Addy app. We need to find ourselves a primary source. It's time to get our hands dirty and find some people who are using the Addy app and are willing to talk to us about it, warts and all.